Rahul Malani joined just now, represents Sheikhan PNB Paribas to understand his take on PNB numbers. Rahul, whichever way I look at it, HDFC Bank numbers do not inspire too much of confidence. Growth is slowing down. I never thought I'll use that so bluntly for HDFC Bank, but that seems to be the reality now.
Yeah, you rightly pointed out firstly. Good morning. So overall, we expected here better core operating performance because we expected better NIMs due to the release of the excess liquidity as the regulation on ICRR would have been withdrawn. But that has not happened. We were in penciling around 5 to 10 basis points improvement in the NIMs, and that is why our NII missed our estimate by 5%. So we believe that near-term trigger lacks here because liabilities at the same time liability side transition is also important because the credit deposit ratio is hovering at around 110%, a very elevated level compared to the industry. And at the same time, deposit growth continues to remain challenging. So until and unless there is a slowdown in the loan growth in the near term to navigate this liability side transition, we do not anticipate a sharp downward in the CD ratio, and things would continue to be on the same trajectory.
The brokerage estimates actually, Rahul, and then I'm going to ask you the same question. What have brokerages done in terms of cutting their EPS and their price targets? Now, FY24, it was 83 rupees. Pre Q3, it was 83 and a half. EPS has been downgraded for FY25 also from 101 to about 98. Then we look at brokerages individually in terms of what has been the cut in the price target also. That is how it is. Novama downgrade to hold. Previous target 1770 becomes 1730. CLSA target has been slashed. No, I think it should be 2000. It should be the other way around, right? If previous target was 2000, then it has become 1900, right? I think they've increased the target. Okay. Rahul, would you be looking at changing in pricing here?
So we believe that bearing all the factors, we believe that earning all those factors which could weigh down the earning trajectory for the merged entity have been played out. So this is the bottom trajectory. So we do not envisage any further downgrade in the earnings going forward for the HDFC Bank, and we have kept our buy rating with an unchanged price target of rupees 1900.
Down. Why won't you change it?
So basically, in terms of if you look at the NIMs also, we believe that NIMs trajectory has been bottomed out. But it's just that the street is not able to envisage the upward movement recouping of the margins, and it will take time around 12 to 15 months. In terms of if we look at the cost to income OPEX ratio also, in next 12 to 18 months, this is also going to be lower from the current trajectory. And in terms of as long as the asset quality cycle continues to remain benign, provisioning credit cost will continue to remain lower. So we do not envisage any further downgrade here until and unless due to the loan growth. And we have already penicillin low mid-teens loan growth in our estimates one quarter prior to the street. So that is why we do not envisage any downgrade in the current numbers.
Much.